Okay, because I want to separate these conversations. So there's some Solana is part of the metaverse. You guys want to tap into the metaverse, and that's what I think why they're calling it Hyperverse now, because they want to get into this metaverse space. Solana, so you take a look at the 1-year return on this coin, you guys, is 14,000%. Okay, so some of these coins are just pumping, right? Some of the other coins out there, we've got Avalanche, and we've learned about these for tokenmetrics. This is another high performing coin. This thing, 1-year return on this thing is 3,700%. Okay, so you can get the stock, the coin picks from us, from Howard too. And then what else we got is Sandbox. That's part of the metaverse, right? So this one is a killer coin. 1-year return on this has started going vertical, right? So when Zuckerberg announced he was going to change Facebook name from Facebook to Meta, so the metaverse, the whole industry started to go parabolic here. You can see how the pump of the coins went vertical, went from like 70.76 cents to like $6. So that's 15,000% lift right there. So then you got some other big coins like Cardano, ADA, they're starting to come alive.
Yeah.
You see your coins pumping, hey?
I saw it looking, yeah. 10% or
Yeah, exactly, yeah. So it's what you learn in our Mastermind Alliance. Look at this one. Cardano was flat for the longest time, and they got contract with Africa. And in October, it just went ballistic here. So you guys think that this 0.5% a day that they're paying us, they can't pay us. They're in a lot of these coins, you guys, and 15,000% is very possible. You know, if we can get some of these top coins in our book, right? What else? Can you hear us now, Howard? He can't hear us. I don't know what's wrong with his audio, buddy.
Operator error.
So you want to mention a few other coins there, Ron?
Polkadot.
Polkadot, yeah. Polkadot.
And then Crow. And then we did that Who exchange.
Yeah, Polkadot. Yeah. Polkadot. Okay, boom. So this one is 1-year return on Polkadot's dead. A bit of a drop here. It's 400%. Okay, so these are really exciting coins. It's right now the altcoins are pumping right now. So you guys going to be really amazed. Now, in your website, you get some really good newsletters, right?
Mm-hmm.
And I'm going to try to find this one section here. Okay, so you want to look on your website, read about the Olympus DAO and that video that I just sent you guys out. Okay, so this is, want to read the Olympus DAO. Okay, so this is very exciting. They're creating like a decentralized currency that is like a stable currency, but it's tied to some really interesting innovations here. Okay, so when you read this article here, what's special about Olympus, and then you watch the YouTube video, Ian Bellini, I'm going to have you guys listen to Ian Bellini because it's a very, very good session here that he's having. I want you to hear this. It's pretty powerful.
If you put $1,000 into Olympus DAO, by the end of the year, you will have $79,000, almost 80 grand, almost an 80x return. Nice. So when you have this glitch in the matrix, and I go through my portfolio during this audit, and I see Armor and any other token that's not doing well, no hesitation, selling all of them to Ethereum, putting this into Olympus DAO, right? Because I would rather take this APY in a project that's pretty stable, that's designed to be stable as a reserve currency, than take the risk of investing into an altcoin that's not giving me my returns. High risk, high reward, right? When you have the high risk with low rewards over a period of time of about 6 months, and you have options like this, which are low risk, high reward, I mean, time to get out. I mean, so I think Olympus DAO is definitely a game changer. This is why this has been the catalyst for what people are now calling DeFi 2.0. And then also this other fork, right? For those of you who maybe have smaller amounts and don't want to deal with Ethereum gas fees, we also covered this as well. Wonderland. This is essentially a fork of Olympus DAO on the Avalanche blockchain. And I have been trying to buy this. I'm having some issues with my Ledger and MetaMask and Avalanche, but I have bought a small portion of Time and a small portion of Avalanche. So Avalanche now is my third layer 1 protocol now. This and Helium and Ether, right? But if you go to Wonderland, they have even higher APYs. They have 88,988%. Right? So basically, almost 890x return. Right? This sounds like it's insane, right? $1,000 will turn to $889,000 in 1 year. Now, obviously, the way this works, it seems pretty crazy, but it does make sense. I mean, when you go through the actual documentation, we had a deep dive done by Mehdi a while back on Olympus DAO, but at a how these, I guess, this DeFi 2.0 works. You have basically AMMs, automated market makers, DEXs, where traders, investors, basically users, can provide liquidity to a project, right? So let's say a project in DeFi 1.0, like Alma Finance, people will go out there, like myself, add liquidity on a DEX, Uniswap, 1x Exchange, SushiSwap, in exchange for adding liquidity, adding 2 trading pairs, Ethereum and that token, in my case, Alma Finance, they would give us a reward, which is essentially an APY, right? For adding liquidity, they would pay us in yield. And the yield with Alma Finance initially was like 200%, then went down to 100% of whatever value we put in. However, the issue with DeFi 1.0 is once that yield stops, once the project runs out of their liquidity mining / incentive program, people remove the liquidity. A rug pull happens. The price crashes, right? So essentially protocols have been renting liquidity, not really owning it. Now, these projects innovated by Olympus DAO, they flip this entire model upside down. They essentially allow the project to own its liquidity. And they do this by issuing bonds, right? So similar to finance, they say basically, we're willing to sell. So in this case, let me deal with this DAO first, right? You come here, if you want to bond, right? You basically can buy these tokens at a discount, right? When you come here, you can bond. So in this case, let's say you wanted to bond the discounts. So we have, if you add liquidity, if you add wrap Ethereum and the Olympus token, OHM, on the LP token for a DEX, in this case, I think it's Uniswap, right? If you take that and then you add it here, you can now essentially sell your LP tokens to the protocol. In this case, to Olympus DAO. They're buying it from you at a discount, right? So you basically, my understanding is, don't call me, because I'm still brand new to this, but my understanding is you're basically selling these tokens, or could be any token, to the protocol, and they own it. They're buying the liquidity at a discount, right? And in exchange for that, right, they will vest, this is for bonding, right? Your tokens will vest for 5 days, and they'll give you a reward, right? So in this case, the ROI is 1.88%, right? So what does that mean, right? So my understanding is you're essentially getting yield for giving them tokens at a discount, right? So if you go through the economics of this, I mean, this essentially is how bonds work. Corporate bonds, government bonds, right? With a government or corporate bonds, you essentially are giving the government or a company your money in exchange for yield, right? So in this case, we're giving them tokens in exchange for yield for their token, right? So they basically, when you give them money, they mint tokens, and that's the yield, right? So coming back here, so in this example, I've put, when I invested initially, it was about, I think, 32. This is the index. So And right now the index value has gone up to 34.8, meaning that you divide the current index by the amount of when you initially deposited the capital, right? But I won't go deep too deep into this, but looking at this, right, this is the current ROI over 5 days. So this is a 6.18%. It sounds pretty low, but
Okay, so you guys, you get the point. I'm just investigating this myself. So this way of staking your coins with the Olympus DAO, and this was something from the newsletter that they had showed us on the website, right?
Yesterday.
Yeah. Oh, you can hear us finally. Yeah.
Yeah, finally.
Fantastic. So this is something we're going to start doing our coin picks and stuff like that. We're learning about rocket ship coins. If you go to Olympus DAO, Olympus, this is the token here. Go to the site, and actually this is the
You're
site
not
here.
screen sharing.
Okay, thank you. So there's the Olympus DAO site, and how I got onto that is I went to the Olympus on CoinGecko, and I just clicked on the website, and because what he's talking about in the video is decentralized finance, which what we're going to learn from Hyperverse, how to get into these the DAO coins, like that we have HDAO, we have there'll be a decentralized token in the Hyperverse token, there'll be a DAO token inside the Hyperverse, the Hyper DAO. And I'm telling you guys, we have 1 million people in our community, and we're going to explode with this Hyperverse with these DAO coins. And so this is the Olympus site, and you want to stake it. In other words, you can hold your coins on the DAO or bond, and the returns right now, they've dropped since the video, but still they've really are ridiculously high. And this is why I think they can afford to pay us huge earnings for referrals. So if you want to just set it and forget it, be passive, the Hyperverse is an ideal situation. But if you want to do a deep dive and dig in and learn to become a professional investor, you guys can make these crazy returns on these coins, right? So, and then Wonderland was incredible too. When I went to their site, their returns are absurd. So I'm checking into this, I'm investigating it to get this kind of returns, $1,000 going to 70,000 in 1 year. Hello. And the thing is that they have the assets, they have collateralization on some of their coins, right? So Olympus, they've got $2.6 billion. So Ian Bellini is saying it's a very low risk than compared to other projects you can get rug pulled on. So I'll go back to some of you guys here that just got on. So do you guys understand when they post these newsletters, when you get to our website, you got to really take some time and read some of these newsletters. Like here, when you go to your site, you log in and you see they mentioned something about Luna here a week ago. The promising protocol of Luna, what was the article date on that? Was the 12th of December. So I started looking into Luna, and you go here and you see how Luna's doing. That's why you need to have a Hyperverse website membership, because you're going to learn about these rocket coins, right?
Yeah.
So look at the return on this one, Luna, 16,000%. So I bought some of that, and I'm up already almost 45% since I bought this coin. So you guys are going to get access to really great coin picks. And what I'm showing you is that I'm studying and researching what they're posting on their newsletters, right? I'm not just a passive member, right?
I bought some of that Luna too.
You did. We got you some of that Luna, buddy. So,
Yeah.
and so I don't know what else we can cover here, Howard, but you got a guy who's kicking the can. Dennis is looking into this, and I think he shouldn't, he should be a little bit curious right now, because this is a little bit more technical, this testimony.
Than we usually do.
Yeah. But I thought I'd give you a bit of a shock there. That was I guess next couple days, we're going to see some of the MOF coins now that they've converted the MOF coin to the TRC20. It'll be less, the gas fees will be less to send your coins out of the site.
We were just trying half an hour ago or so, Ron and I were trying to do a conversion into MOF and it didn't work right now, but
Yeah, they're not converting now. Yeah, they'll be tomorrow, the next day.
tomorrow.
So what do you want to cover here?